talk about something else. Something that is forgotten that will get you, me, we, the ASK THE WIZ Wealth Institute family, P.A.I.D. Now, in trading and investing, you must understand and understand that oftentimes a lot that occurs has to do with deception and trickery put forth by the market makers. And that is just an unfettered truth. Now, once you are able to understand and understand that, once you're able to realize that that is indeed a reality as it relates to trading and investing, then you are well on your way to planning the foundation that will get you P.A.I.D. consistently from trading and investing both in the domestic and international markets. Now, I want to talk about another traditional form of money that most people have completely forgotten about, okay? Now, as you know, I frequently speak on the role of gold in the monetary system, or the lack thereof. But when I speak in the public about gold, I inevitably get one question from the audience during the question and answer session, and that is, Dr. Reeves, what about silver? Here's my answer to that question. You see, yours truly loves silver, okay? Some assume that yours, me, and other economists and several analysts, okay, dislike silver as a hard asset for our portfolio, because most people usually focus on gold, the shiny yellow metal. But that's simply not true. I own silver, and many of my colleagues own silver as investors. For instance, do you have a flashlight, spare batteries, and some duct tape stashed away for home emergencies like power outages or hurricanes? Of course you do. Okay? How about 100 ounces of silver coins? You see, if you don't, you should. You see, silver and gold are both precious metals. There are only 4 precious metals, the so-called noble metals, if you will, in the periodic table of the elements. Okay? There's silver, there's gold, and the other 2 are platinum and palladium. Now, from an investment standpoint, silver is more difficult to analyze than gold, because gold has almost no use except as money. Now, gold is widely used in jewelry, but I consider gold jewelry a hard asset, okay, which I like to call wearable wealth. Silver, on the other hand, has many industrial applications. You see, this means that the price of silver may rise or fall based on industrial utilization and the business cycle, independent of monetary factors such as inflation, deflation, or interest rates. And more importantly, silver, like gold, is a form of money, a form of currency. Gold may have a higher valuation by weight and may be more scarce than silver. But you see, silver has seen much wider usage as money and as a currency throughout world history. For instance, in an extreme social or infrastructure breakdown in which banks, ATMs, and store scanners are offline, silver coins might be the only way to buy groceries for your family. A gold coin is too valuable to exchange for a basket of groceries, but a silver coin or two is just about right. Now, Bitcoin, which depends upon a normally functioning grid, certainly won't get you anything you need when there's no electricity, now will it? And if a failure happens, we're talking about the grid going down, which is very, very possible, especially with cyber hacking and the like. Okay? If a failure happens, and don't believe for a second that it couldn't, shortages will appear and the price of silver will soar. Okay, some think as high as $60 per ounce or higher, a roughly 250% gain from current levels of around $17.50 per ounce. Beyond the real possibility of emergencies, my expectations is that as savers and investors lose confidence in central bank money, they will increasingly turn to physical money, i.e. gold and silver, as stores of wealth and a medium of exchange. Now, digital money can be seized or manipulated in ways traditional currencies cannot. This is why many people call silver the once and future money, okay? The once and future money. I'm going to explain that because silver's role as money in the future is simply a return to silver's traditional role as money throughout history. And I'm going to talk about that a little bit later, okay? You see, silver has centuries of history behind it. From antiquity until the mid-20th century, citizens of even modest means might have some silver coins. Today, there are no circulating gold or silver coins. Such coins as existed are bullion, and they're kept out of sight. Nevertheless, silver is a form of money along with gold, dollars, Bitcoin, and euros, and always has been. Don't assume that the rise of cryptocurrencies has displaced physical metals like silver. Now, what does that mean for you, my beloved Ask the Wiz Wealth Institute family and listeners alike? It is recommended that a 10% allocation of investable assets to physical gold, not paper gold, physical gold and silver should be in your portfolio. It is also recommended shares of well-managed mining companies and royalty companies as a leverage play on physical gold and silver will get you P.A.I.D. Now, I'm about to show you how silver supported the economies of empires, kingdoms, and national states throughout history, and why silver could return to its historic monetary role. You need to remember, both gold and silver are often found together in nature. The processes used to recover one will often recover the other. And when the price of either metal rises, mining stocks can rise by many multiples of the metal itself. And here's the thing. A bull market in silver is about to kick off, and silver will actually outperform gold in the short run. And even better, shares in well-managed mining companies will do even better than silver. So this is the ideal time to do the appropriate drill down for possible actualization of well-managed mining companies to be placed in your portfolio to get you P.A.I.D. Let me tell you a little bit of history about silver. The Roman Empire, okay, had gold coins called the Aureus and Solidus, but they also minted a popular silver coin called the Duranius. One Duranius was the daily wage for unskilled labor and Roman soldiers. Now, of course, in the late empire, the Aureus, Solidus, and Duranius were all debased by mixing the gold and silver with base metals. The decline of the Roman Empire went hand in hand with the decline of sound money. Then, in the early 9th century AD, Charlemagne greatly expanded silver coinage to compensate for a shortage of gold. This was successful in stimulating the economy of the predecessor of the Holy Roman Empire. In a sense, Charlemagne was the inventor of quantitative easing. That's why QE over 1,000 years ago. You see, silver was his preferred form of money. Now, under the U.S. Coinage Act of 1792, both gold and silver coins were legal tender in the United States. And from 1794 to 1935, the U.S. Mint issued silver dollars in various designs. Now, these were widely circulated and used as money by everyday Americans. The American dollar was legally defined as 1 ounce of silver. Now, the American silver dollar of the late 18th century was a copy of the earlier Spanish real, okay, minted by the Spanish Empire beginning in the late 16th century. Now, the English name for the Spanish coin was the piece of 8. Ocho is the Spanish word for 8. Now, because the coin could easily be divided into 1/8 pieces, thus the name. Now, until 2001, stock prices on the New York Stock Exchange were quoted in eighths and sixteenths based on the original Spanish silver coin and its 1/8 sections. Until 1935, U.S. silver coins were 90% pure silver with 10% copper alloy added for durability. And after the U.S. Coinage Act of 1965, the silver content of half dollars, quarters, and dimes was reduced from 90% to 40% due to rising prices of silver and hoarding by citizens who prized the valuable silver content of the older coins. The new law signed by President Lyndon Baines Johnson in 1965 marked the end of true silver coinage by the U.S. at that time and forevermore. Other legislation in 1968 ended the redeemability of old silver certificates, paper treasury notes for silver bullion. Thereafter, U.S. coinage consisted of base metals and paper money that was not convertible into silver. Gold convertibility, if you remember, had already ended in 1933. So, let's hope that the U.S. is not following in the footsteps of the Roman Empire in terms of a political decline coinciding with the substitution of base metals for true gold and silver coinage. In 1986, the U.S. reintroduced silver coinage with a 99.999% pure silver 1-ounce coin called the American Silver Eagle. However, this is not legal tender, although it does carry a $1 face value. The Silver Eagle is a bullion coin prized by investors and collectors for silver contents, but it is not money. Okay? Who in their right mind would pay a full ounce of silver for goods or services worth only $1? In short, silver is as much a monetary metal as gold and has just as good a pedigree when it comes to use in coinage. Silver has supported the economies of empires, kingdoms, and nations throughout history. And it should come as no surprise that percentage increases and decreases in silver and gold prices denominated in dollars are closely correlated. Silver is more volatile than gold and is more difficult to analyze because it has far more industrial applications than gold, as I mentioned earlier. Silver is useful in engines and electronics and coatings. Interestingly enough, gold is used very little other than as money in bullion form. Gold has some highly specialized uses for coating and ultra-thin wires, but these are a very small part of the gold market. Both gold and silver are used extensively in jewelry. And as I indicated to you earlier, I consider jewelry wearable wealth and akin to bullion rather than a separate market segment. Now, because silver has more industrial use than gold, the price can rise or fall based on business cycle, independent, and monetary considerations. However, over long periods of time, monetary and bullion aspects tend to dominate industrial use, and silver closely tracks its close cousin gold in dollar terms. And while gold and silver prices have a high correlation, the correlation is not perfect. There are times when gold outperforms silver and vice versa. Right now, we are in a sweet spot for silver. Gold is indeed performing well, but silver is performing even better. The latest data is telling us that silver prices are set to rally. This conclusion is based in part on a bull market thesis for gold. Now, gold staged a historic rally from 1999 to 2011. From about $250 per ounce to $1,900 per ounce, a gain of about 900% in that 12-year time frame. Now, since then, gold prices fell in a 50% retrenchment and bottomed at around $1,050 per ounce in December 2015. Now, secular bull and bear market tops and bottoms are difficult to see in real time, but they become apparent with hindsight. Gold gained over 23% in 2016 and 2017, from 2016 through 2017. From the perspective of early 2018, it is clear the gold bear market ended over 2 years ago, and a new multi-year secular bull market has begun. Now, silver is not only along for the ride, it is showing even better performance than the shiny yellow metal gold, albeit with greater volatility. Now, both the gold and silver rallies are based on a combination of supply-demand fundamentals, geopolitical pressures creating safe haven demand, and increasing inflation expectations as confidence in central banking and fiat money erodes. And in addition, silver has an excellent technical setup right now. Okay? You see, technically, silver is ripe for a major breakout to the upside in 2018. And this is not unheard of, but is relatively rare for silver, okay? The last time COMEX silver was net short was between the end of June and the first week of August of 2015. Now, as investment sentiment can swing from one extreme to another, and given silver's innate volatility, this net short position should point to the possibility of a sharp short cover rally. Now, looking at the history and the analytics, looking back at the corresponding period in 2015, silver price was trading at $15.61 per ounce on the 7th of July, and it was the third consecutive week recording a net short position. Approximately a year later, silver was trading over $20 per ounce in July of 2016. So, this is saying that at the end of the day, barring in crisis, okay, silver should rise and is poised to rise per current market conditions. Now, the good news is that this secular rally in silver is in its early days. Recent gains will be sustained and amplified in the months and years to come. Silver is poised to outperform gold in the short run, and shares in well-managed silver mining companies will do even better than silver. That's your silver lining to get your P.A.I.D from the forgotten metal. Well-managed silver mining companies. You've just received information that will allow you to not only obtain but maintain your economic liberation by actualizing and monetizing the information given to you. Now keep in mind, many people are not noticing silver as we speak, and that's why we must see now what others see eventually, and as industrial application increases, as the economy continues to grow, and as technology as we know it continues to move forward, silver will be utilized in large amounts to further that activity, and thus will get you, me, we, the ASK THE WIZ Wealth Institute family, P.A.